So then let's look at the terminology. So these are some terms that are used in accounting that are also used in your bookkeeping. So even if you're not the person responsible for doing the bookkeeping or financial management for your project, I think it is really healthy to understand what is being, what people are talking about, what the people who are managing the money are looking for and how they're accounting for it so that you can participate, submit your receipts correctly and understand that how you're feeding into that process. So in bookkeeping and accounting, we talk about debits and credits. Okay, debits are is the word that we use to talk about expense transactions. So this would be any expenses related to your project work, any purchases that you're making, or any payouts that you're making to individuals for staff or for reimbursements. For example, those are all considered to be debits and expenses. Okay, credits are your revenue transactions. So those are any deposits of funds that are going into your account or going into the project from any source. Okay, so it means expenses and revenue, but in bookkeeping and accounting, the terms that are used are debit and credit. Okay. Opening and closing balance. These are terms that are used to describe funds that may be in an account, be it a bank account or a project account at a beginning of a time period, and then what is left in the account at the end of the time period. So your opening balance is the amount of money in an account, whether it's a cash account or actual bank account at the beginning of, say, the month or the year or the financial reporting period. And on the flip side, the closing balance is the amount of money in an account, whether a bank account or your cash on hand account at the end of a financial period. I apologize, there's a typo there on my slide. So opening is at the beginning, closing is at the end. So what that shows is your any transactions that happen in that financial period, whether it's a month, a quarter, or a year, are accounted for, and then the closing balance is what you have left at the end. Okay, this is something you might be reporting to, say, a board of directors. If you're a registered organization, might be something you're reporting to a funder to say our opening balance at the beginning of the project reporting period was X. We had these debits, and now our closing balance is Y. And that's the kind of very basic financial report you might be submitting to a funder on a regular basis throughout a project. Okay. Reconciliation, or to reconcile an account. This is the word that we use to talk about the process of ensuring that all of your records are aligned. So if you're doing bookkeeping for a project and you're keeping track of all of your debits and credits into, say, into your account, at the end of a period, your financial records, your bookkeeping records, should look the same as the record that your bank would give you on that account. Okay, so once you have all of the project records or your bookkeeping records are reconciled to show that they are aligned and accurate according to, say, your bank account. Okay, so this would mean also for any cash account, that after you do your bookkeeping and accounting of all of your debits and credits, that the closing balance in your cash account should equal the actual amount of cash that you have available in your cash supply. Okay.